Hi, you are watching SB Traders. Welcome to Technical Analysis course chapter 2. If you wanna check our previous chapter, just go to our playlist on Technical Analysis course. So let's move on. This is a course about introduction to Japanese candlestick chart. So actually this won't come under technical analysis, but most of the technical analysts and traders will be using this chart. But as a beginner, you will be using line chart only. So this chapter aim is to convert you from line chart to this candle chart, which is more effective and more powerful. Okay, let's move on. A common disclaimer. This video is only for educational purpose. Please learn trading and use your own trading strategies. Before moving on, many beginners will be using line chart, so it's very important to understand how it works. So basically line chart is joins 2 point. That 2 point is depends on what time frame we choose. For example, take this chart. Suppose this is a opening price at 9 a.m. This point is the closing price at 9:05 p.m. 9:05 a.m. So joining this 2 point will make a line. Again, this is a closing price at 9:10 a.m. This is a closing opening price at 9:05 a.m. because the closing price is equal to opening price. So join this 2 points. This makes a line. So this is how a line chart is drawn. So what is the disadvantage in this? So the main disadvantage is we are only joining this 2 point, but we don't know what is happening in between. It may have moved like this, it may have come down like this and finally reached this point, or it moves slightly like this and reached this point. So we don't know what's happening. So it's very important to have one more type of graph representation, that is the candle. How to read a candlestick chart. Before coming to this slide, please go to your broking account and view candlestick chart. You may find lot of candles like this. You may find lot of different candles. So we will learn how candlestick, like how to read a candle. This is a single candle we are taking, and this part is called body, and this two lines, upper stick and lower stick. So this body represent the bottom of the body represent the opening price if the candle is green, and the top of the body represent the closing price. So basically like line chart, what is happening, if at 9 a.m. the share opens at $18 and closes at $20, no, rupees, 18 rupees, and at 9:05 a.m. it closes at 20 rupees. So uh, basically this body is opening price and top is closing price. So this is similar to line chart I told you, but what is extra here? Here you can see this stick, upper stick top and lower stick top. This upper stick top represent the maximum price reached between this time 9 a.m. to 9:05 a.m. This can be 21 rupees and this can be 17 rupees. So what is happening in line chart, you know only the 18 rupees and 20 rupees opening and closing price at 9 a.m. and 9:05 a.m. but you don't know what it low makes. Suppose it makes 17 rupees and high makes 21 rupees. So you can visualize it come down and again gone up and again reach 20 rupees. So this is how line chart works. Candlestick chart works. So you can understand how candlestick is comparatively advantage to line chart. So we will move to red candlestick. Red candlestick same, but its only difference is the opening is on the upper body and lower body it represents the closing price. Suppose the share opens at 9 a.m. at 20 rupees. It closes at 9:05 a.m. at 18 rupees. So the high made is 21 rupees and the low made is 17. So what is happening? This would have moved up and come down to 17 rupees and reached 18 rupees. This is additional information you are getting in candlestick. In line chart, you can only interpret opening and closing price for respective time frame. In candlestick, you can see high and low also. I have mentioned this yearly itself. This is a main advantage of candles, and because of this advantage, we can find many candlestick patterns which can be used to interpret the direction of the market. We will see different types of candlestick in the next slide. This candle is known as very bullish candle because there is no high. The high is the closing price. So we can assume there is no selling. The only heavy buying is there. And this pattern is known as hammer pattern. This can be found in many support points. Why? Because the sellers tries to sell very fastly. You can see the lower stick. But after some point of time, the buyers take over the market and close to somewhere close to the opening price. So what is happening? Some buying pressure coming on. So if you find this point in supports, you have, if you use a proper technical analysis and if you find this hammer, it's like assuming you can buy that in that area, and the probability of your share to go high is increasing. And this is normal bullish candle, you can find somewhere in the bullish uh, bullish charts. And doji is very interesting pattern because you can find it in the reversal points like support and resistance. Here there is a high volatility is happening. Actually this candles, I am talking only in day time frame. Why? Because in intraday anything can happen. I always talk in day time frame, and if you find doji in day time frame, it can represent some volatility or some reversals. Inverted hammer is somewhat opposite to hammer. This you can find in resistance point. Why? Because the buyers takes over the market and reached so much high, but after some point of time, after so much high, sellers takes over the market and closes somewhere to the opening price. So mm, so it's like a resistance only, the sellers taking over the market. Okay, because there is no low made. If there is some low, you can tell some buying happens, so only the closing price is higher than the low. So this is very bearish candle, and this is hammer candle. This is same like the hammer you saw in bullish, there is no difference. An inverted hammer is also the same, only difference is it closed somewhere positive, it closed somewhere negative, that's all. Normal bearish channel which you can see in downgoing shares, and bearish doji is also same as bullish doji, only the price, only that this is red and that is green, only small change in price. Okay, and your homework is learn about shooting star pattern, engulfing pattern, reversal patterns. Mostly we won't be using this, but if you, many traders will be using this. If you it can increase your effectivity in trading and learning about candlesticks. Share and subscribe our YouTube channel because we are taking so much effort in making this video. If you share and subscribe only, it will encourage us to make more videos. Thanks for watching.